Good morning, everybody. All right, so support held, and obviously we're looking at the S&P futures here, and it was a momentum move. Good morning, everybody. Oh, 1 second here. All right, it was a momentum move higher, which created a void. What's a void? Now there's no support underneath. So it's got to be created. And of course, we don't see any in this time frame. I would say, and we can look at it, there's probably some down here in the futures where these bars overlap each other, which is around between, I guess, 11 and 12 o'clock. I'll scroll over on the 15-minute chart and take a look. So you see the down bar here, the rejection, where it popped up to new highs, which was at 2 o'clock in the morning. It came back in, and then there was a second rejection as it tried to go up. You can see now we've got multiple pivot highs up there and a void below. So what has to happen now is buyers have to step up if they really believe this is, a turn. And we do have a turn here. This is a pretty big level to try and get through. You see on the daily chart the rejection there, and then this wider bar rejection. And, so now it's retraced back up. And we've got a range, somewhat of a range expansion bar. This was a range down. So this essentially is just going sideways. At the beginning of the week, we talked about this weekly buy setup and the deep retracement here and where it's retraced to. This is where it should try and make a turn, and it's trying to make a turn. So now we reverse, meaning the view on the downside and retracing into a wide range bar further up now to stay in the upper 50% on a closing basis above this wide range bar, the green bar up. And so just eyeballing it, there's nothing, it's about 50%, but there's nothing here. Now there is this what's called minor support at 39.50-ish. Give or take. It's a subjective reference point because we're crossing beyond what's directly to the left. But let's just see, where this is right here, 39.40.50, and scroll this over, scrunch this up a bit. Let's see where this lines up. Yeah, there's a little bit of support down here. I know it's a little hard to see because I've got it scrunched up there, but hold on. That's why there's so many things that are widely accepted about technical analysis as to what, whether it's trend lines, fib lines, whatever. But you can see the congestion right here where it's more difficult to see on the hourly chart. But most of the time when you're looking beyond what's directly to the left and you look at an area of, okay, what was resistance should become support, there's a reaction on the way up to it as to it being down to a lower time frame. Sometimes you see it here. As I said, these overlapping bars told me where it would be, and you can see it on the 15-minute chart. So pullbacks into this on the S&P's 39.40-ish area, give or take, should be where buyers want to step up and try and hold it there. Maybe it comes down to the pivot at 39.32, but now that it's gone sideways, we really want to see it try and pop back up, break down failures. What we don't want to see is a retracement all the way back down into the bottom of the void. Because then essentially what we begin to get is what we call a Christmas tree pattern. And that's where you start seeing, red, green, red back down again and flipping back and forth. But so look, if it goes all the way back down there, we're going to have another continuation pattern down signal. I don't like Christmas. I love Christmas. Point being, the red and green lights, meaning red and green candles going back and forth like that. And so, highly volatile, erratic ups and downs. So, that's the bias for today, for this to stay now, in that upper half, give or take, where I pointed this out here, and you can see the green area there. So as this comes down, this should begin to stabilize. It will begin to stabilize there. Question is whether it holds there after it begins to stabilize. So that's what you're going to want to look for. All right. Hey, McGraw, what do you think about that juice up above? I mean down below. I don't know what, it's probably increasing, but I was surprised to see what I have written down here, 3880, 3875. There you go, Jacob. We're on the same page. Down below here, I was surprised to see that much on in the puts below that green bar after the big up day. Yeah. We'll take a look. So let me just peek at the spiders here. And so you can see it's up there in the upper part. And so you can see the gap reversal, the green bar up. And now if we have the red bar back down to today, if that happens, that Christmas tree kind of red, green, bars overlapping each other. And so it chops around here for a few days. And especially if it goes all the way back down, it opens up the door to coming all the way back down to the, June, July lows. So we'll see. You can see the hourly there and the overlapping bars. It's more evident as to where the support is on the spiders, these overlapping bars right there. All right, SPX, I'm going to take another look since things are coming down here a bit. Probably get a little further away. Up above, I had 40.50, but maybe that premium's evaporated by now because I didn't, think it would get above this area up here today, especially since now it's pulling back. And let's see what's there now. You can go to 40, 45. 40, it shouldn't even get to 40. I mean, now it's over here. And so with this congestion that's going on here, look, Powell's not going to say anything that we didn't hear yesterday. Well, price of oil's coming down. Okay, big deal as far as what everybody's going to be dealing with. So, all of these comments are that they're hanging their hat on the consumer. It's, the old thing about looking in the rearview mirror. That's exactly what they're doing, because when inflation being what it is, companies beginning to cut back, people starting to lose their jobs. Who doesn't want to pay for higher prices? Consumers going to cut back. So I don't see that happening. Consumers staying strong. It just doesn't make, to me, common sense. All right. So down below, it should be increasing now. And I was surprised. Look at this. Down here. $70, $38.70. I mean, he would have to say something god awful today. Like, he's going to raise a whole point, not 75, to push it all the way down here today. If we get the red bar all the way down today, well, that would open up the door to that for tomorrow, because then we'd have a continuation pattern down. So I don't see it coming down here today unless there's the unknown. We can't base opinions based on, something that doesn't make sense based on the charts. And so there's nothing there to support that belief that it's going to break down below this level today. So I see this as being a safe level for a put spread today. And, up above here, let's just see, 40. I think the downside is the no-brainer today, right? Could it get up there? Right? I don't think it will, but the downside should be the no-brainer. All right, looking elsewhere, you get some clues. NASDAQ futures are now down 90, so they're retracing still in the upper half. This cluster of support is right here. A little bit down below, you see these overlapping opens and closes. That's where the support is. You can see it right there, that congestion. So I see a day of most likely just stabilization within yesterday's range. I am down a little over 100. Big deal. Same pattern. And Russell, same pattern, same thing. Things are reacting in similar ways here. This is something, my art from a week or so ago. Let's get rid of that. All right. Bitcoin got back above 19. Well, it was a little earlier, but chopping around in the bottom part of this. Just scrunch this up a little bit. Anyway, in the bottom part of the red bar, the big red bar. So we just factory work. And so you get consistency in your analysis, not jumping all over the place for, drawing different lines here and there. Do your work the same way, technical work as a trader the same way you would in any other profession. And you have your foundational concepts and work, and you apply that every single day. All right, so Bitcoin chopping around a little bit. It had this little rally, same as everything else yesterday, and now it's just flip-flopping around. But until maybe it can get to the top of that red bar and back up to 20,000, if it can do that, the bias is it's going to go down. But we'll see. Internals, Tony, as mentioned, last week, the end of last week, they aligned at a bullish extreme, meaning they came down enough. And so far, it's just been stabilization. So it's down here. And now, as always, we see what prices can do. Meaning we've got, looking at the S&P. Why did that go black? Hold on. There we go. We've got this turn, right? And so we need a little bit more, right, to see, can it get up into the void above? Now, we talked about it earlier in the week. So what it would do now is chop around here, as I said, in the upper half. If it dips down below, we need to see it close in the upper half, and chopping around up here, probably for the rest of the week, or if we get a bottoming tail bar to trade above that, could get a retracement. But you got some pretty stiff resistance, and can it get above the 50 MA? This rejection point up here. But they reached an extreme, and we got the stabilization, which is what typically is going to happen when they get there. All right. So metals, technical bounce. That's what I mentioned earlier in the week. They've reached a point for a technical bounce. It's trending down. And unless the dollar, begins to turn lower, we got a pretty big red bar. So greater than 100% retracement. The weekly is still up. So again, it just makes sense to get some stabilization in these precious metals, with the dollar having at least a reversal, but nothing of significance to suggest that, they're going to have a major turning point here. They could, just based on, this weekly chart being at support, but we'd need to see the dollar weaken further. And then, of course, short-term interest rates, and that isn't happening. So the 3 months here are up at 3%, and you can see they're all green this morning. That's the 5, just chopping around for now. The 10-year, which everybody is focused on, just chopping around. I mean, it's at resistance, which you can see right up there at 3.4. But so far, just back and forth. And for what at the moment is bullish price action, at resistance. You can see the momentum is stalling. The weekly range has gotten smaller. at here, but that makes sense. But we need some kind of a bearish bar here, meaning, and with this Thursday and Friday, I don't see it happening this week, but what would a bearish bar be? Well, if it followed through to the upside, say next week, and then reversed right back down, like this topping tail bar, if we were to get another one over here where it broke out above the highs and then came back down pretty hard, I would be more convinced of a relatively significant turning point for the markets to have some kind of a rally, but that's of course yet to be seen. And I think that's about it. Let me just see the yields here. The 5x3 intraday. This got inverted a week or two ago, and it flipped back up again. And intraday the other day, McGraw pointed out to me that it was posted that they were inverted, but it got back above the zero line, and this is chopping around. And this is the 5 versus the 10, which has been below here for a while. So, whatever the talking heads of government wants to say, this country's in a recession, and it's going to take a while to fix the mess they've gotten us into. So, all yours, Daniel.
You got that right. The mess they got us into created the housing bubble, asset inflation. You got it. High oil prices. All right, we started adding a bunch of put spreads yesterday on the turn on many things. So pulling in a little bit here, but everything's fine. Got a couple earnings trades. One of them's Riven here, not very liquid, so we're gonna have to give it some time, but we got the 200s way down here. I see a print here at 218. Gapping the general rule, we don't want it to get more than 50% into the bar, but we'll see where it opens up after 5 minutes, because I'm sure it's going to be very spready. Look at this Riven. We have 2 trades here. We have a naked puts for tomorrow that should be worthless. It's a 30 spot 50s. And we're also core long. We have 2/3 of a position. Beautiful weekly, monthly. Look at that. It's a perfect time to get in. Bottoming pattern, gap reversal, broke out, reversal and support in the 20. That's exactly what we teach. Yeah, no kidding. Free crack. You got it. Now it's free student loans. We also did ASAN into earnings. So that one's working beautifully. And this is also just a beautiful chart to do into earnings. Doesn't mean it won't get whacked, but our approach is we take a technical approach to if we want to sell credit spreads into earnings. So that one's going to pay off. Finally, we did love LOVE, another one, nice reversal and support. And I was hoping we were going to have a home run here, gapping up to 33 bucks. But this is what I tell people, you really don't know what's going on until the opening print. And this little collapse is just suggesting that they had, some pre-market earnings talk, blah, 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 earnings call. So we'll keep an eye on that. Let's see what I got over here. This fur in the green trading room gave these couple. Yeah, PCG looks great. That's a beautiful, beautiful continuation pattern. Big run. Potent reversal here at the 200. 100% retracement. Bullish price action. Red bars ignored. Got a price void on the monthly. Yeah. I mean, remember, this was the California utility that was on the verge of bankruptcy with all those fires. And, the charts say yes to, it's time to go in. Look at this Nexi I saw just going by the ticker here. It's a biotech, so higher risk, but 30-minute high. It could be coming out of this weekly death trend. And this, I don't know what the news is, but I'm sure it has something to do with their drugs, with their company. NTNX. This is bullish price action. The fact that this big gap did not retrace at all is incredible strength. I personally am a little reluctant buying things this far from the 20, but there's absolutely no doubt of its strength. Momo, I like kind of the bear sandwich. So yeah, you can set and I like the weekly. Yeah, weekly could go to 6 and change. I had it on my watch list the other day and I took it off. So now I'm going to put it back on at 535. $535. All right. BNAB. It's a gap reversal going sideways. So yeah, it looks like it'll churn its way higher. And then ACO kind of looks like a buyout to me. Big gap and a tight range, but provided it's not a buyout, then yeah, it looks higher. Crocs, this is one I posted as a put spread yesterday. We did not get filled. And I just sent a telegram saying, let's just hold off so we don't get filled blindly. I don't have Powell on, but it looks like we've kind of stabilized a little bit. Pixie. Ow, up over $15. What is going on with that pre-market? This Ether, this is a total head and shoulders pattern. Left shoulder, head, right shoulder, price void. But it also, we talk about teaching failed head and shoulders. So over the week's high, this looks higher. And I know there was some news of Ether the other day about merging with another crypto. AMXL is a bio, big old gap up, nothing to do with that. SLVM, I have this on the bottom right, and this one I have on my list as a possible excessive gap down. See it gapping right to the 200 here on earnings. Bravo Juliet. Wow, yeah, I missed that one yesterday. Yeah, Greg gave us a couple retailers to watch, but absolutely that would have been tradable yesterday. Let me add that to the list. I'll give you all this list again. I'll just add it right now. But you can see there's a number of retailers in that list right there. Most have earnings. Let's see, no pattern. Into gapping up a little. I don't like the way it trades, all those overlapping bars. Myrna, it could be a retest. It could be, it needs to get, today's Thursday, it needs to get over Tuesday's bar, and then could be a put spread idea for tomorrow. PHR, I don't see a gap. Ben, I think downgrade looks lower. So many of these consolidations, we've been saying you can trade them up or down. Because you got a price void, and if it goes down, it's a continuation pattern lower. Maxin, that's worth watching. I think it got an upgrade is all, not earnings, but trading range, nice closing bar, gap up, that's not bad. Schillis got a downgrade, I think. So it's a bearish gap into this bar. But for the gap, that was a bullish close, but I don't like the way it trades overlapping bars. CSIQ got a downgrade, but that was a beautiful close yesterday. This is a solar. Solars were really nice yesterday. Look at Fizzler up today, got an upgrade. Some brokerage firm. I just don't understand the so many of these brokers. I mean, some idiot came out and gave this an upgrade. He had a price target of 60. And now he gives it an upgrade to 165. It's like, I don't get you, man. You know, that's getting extended from all these MAs. But we sold. Okay, but I'm talking about the timing, Rich. The timing of when these people do things. So I you know, I don't know if they use technicals, I think is the problem. But it's like, you know, Apple goes from 100 to 200, and then they say, oh, let's upgrade it now. It's like, really? Where were you at 103? All right, so TAN, we sold a put spread yesterday. If it holds here, we'll get a nice 1, 2, 3, which is exactly what we want. No, that is not a good condor. No. No, go back and look at our MT live, Russell, that we did. No, so we'll talk about it later in the green room, but no, that's not a good example. Here, I'll show you right now. Our Daku, not Daku, what's your name? Duo. Look at Duolingo. That's a condor. You want a wide trading range with definitive. So look, 80 down here, 115 and above. And Duolingo is a great one because it is so juicy for some reason. No, FT, it's not. So now I see that we have something to talk about later. I can't get into it now other than just compare it to what I just said on Duolingo. Is Apple a wide trading range with flat MAs? No. So I would have a directional bias. All right, W. All right, opening up here. W whiskey is gapping down on a secondary offering. I actually had this on my core long list back in here. All right, bells going off is a good sign for me because those are targets. Got filled. Let's see what I got filled on. Okay, love. All right, so I got out of let's close love. I got out I gotta see what price I got out. Yeah, I got out at a nickel. So let's go ahead and do that. At first I said bid a penny, but then I changed it to a nickel when I saw that pre-market. Well, markets are,